Hi, everybody. This is Cynthia with Global Traveler Realtor coming to you today with my good friend David Johnson from Credit Plus. And we're going to talk about credit education because as a realtor, one of the number one things that comes up all the time is, I don't know what my credit score is. I don't know if I'm eligible to buy a home. I don't know how to repair it. And sometimes you could do things you think are moving you in the right direction and actually they're not.
We get these questions a lot, and basically we spend our days answering these questions and putting together tools that help consumers out so they can become loan ready. And one of the easiest things that consumers can do to improve their credit score is, the first one's pretty obvious, and that is make sure you're paying your bills on time every month. And one of the things that we find that can really help that is to make sure that people are on auto pay. They set up all their accounts just to auto pay every month the minimum balances. And that'll go a long way to making sure that, number one, your accounts are paid on time. But the second thing that we see a lot of is debt ratios. You may be maxed out on a credit card. And the way the credit scoring models work is that the more in debt you are, the lower your score is going to be. So let's just say you have a credit card with $1,000 credit limit. If you don't owe anything on it, that's good. As you start to approach that $1,000 at different percentages, your credit score is going to drop. So what we recommend is that everybody looks at all their credit cards and make sure that they're paid down, ideally to zero. But if you can't do that, make sure that they're paid down to at least 30% used or less every single month. And that's going to go a long way to helping you establish that better credit score. Our conversation is designed for somebody that is going to be a home buyer at some point in the next 6 to 12 months. If you've already bought your home and you're just doing maintenance or wiping out debt, then yes, of course, you can do other things. But all this is designed to maximize your credit score so that, number one, you can become qualified to buy a house. And then number two, even though once you're qualified, you still need to have a higher credit score so you can get the best tiered pricing, you get the best mortgage insurance rates and things like that. So very, very important.
Thank you for bringing that up, because a lot of times people look at what the rates are and they think that they can qualify for the best one, not realizing that their credit score could really make a difference for that.
That's exactly right. And when you look at it, you have no different than if you go to sports betting. There are odds, right? So the mortgage industry is the same way with the tiered pricing. And there's an illustration here that you can see that basically shows that if you have an 800 credit score or higher, those are the 1,292 to 1 is going to be your default ratio. And then on the flip side of that, on the lower end of the credit score, you can have as low as 1 out of 8 coming back. So that's where the investors draw those lines and they say, hey, we want our consumers to have a 680 or a 720 to get qualified. And then if you go over the 740 or 760, then you're going to have better pricing. So very, very important. And a lot of times a consumer may be sitting, let's just say the cutoff is 740 and you're sitting at 639. Well, one extra point could end up costing you a significant amount of money each month. So that's why it's very important to understand some of the tools and tricks to make sure that your credit score is as high as possible. And one of the things we just mentioned was the revolving balances. Another thing you want to keep in mind are the number of cards that you have and how old they are. So in the credit world, everything is time sensitive. So if you have, bad information, then if it happens right away, if it happened last month or 2 months ago, you're going to get hit pretty hard for that. As time goes on, it's going to start to heal itself. Typically, you'll get penalized the most for a derogatory item for the first 6 months. And then after that, you'll still get penalized for the first 2 years. Then it'll lessen, and then over time, it'll start to heal itself. That's for derogatory information. For good information, it's the reverse, meaning that the longer you've had good established accounts, the better that's going to be for your credit history. So that's why when you look at your credit report, you always want to make sure that you have long established accounts and you don't want to close them. You want to leave them open so they have that very strong credit history.
Doing some credit education and working for Credit Plus, we have the opportunity to work directly with our buyers that we can bring to you that can really, you can tell them exactly what it is they want to do. Because you and I chatted the other day about somebody who was thinking about buying a house and then they recognized, oh my gosh, they had collections.
So a lot of times what typically we see is that somebody will go house hunting on a weekend and they get all excited and they want to put an offer on a house. So, by the time you pick out the house, then you refer them over to the mortgage lender and they're getting ready to go and make an application. But before they do that, they realize that maybe they had a blemish on their credit report from 2 years ago, or maybe they had, something that's just not right. So they go in and they start doing actions. And you want to be very careful, because if they go in and start doing actions, it may not be the best action to do. And for example, like with collections, with any kind of thing, that if it's seasoned and it's minding its own business, then they've already taken the penalty for it and their credit score is already healing. But let's just say, this person that saw the home over the weekend decides they want to call up today and address a particular problem, and they call the creditor and they make a payment arrangement or they negotiate something. Well, all of a sudden now they've changed that data loss activity to where now it's a brand new item that everybody has to deal with. So you want to be very, very careful about doing that. And the best advice that we can give is to have the mortgage professional pull the credit report, look at it, and if you're where you need to be, great. But if not, they can model things out and look at it and give some good advice and say, hey, this is the action you need to take. This is the time frame we want you to do it in, and then this is going to help out your credit score. Or it's fine to do it now, whatever the case may be. But those tools are out there. It's very important to let the professional take a look at the report and make those determinations.
Yeah, thank you very much, because I know, one of our questions is always, how soon should I start working with a mortgage lender? And we talked that it's important that if you're even thinking about it, even like next year, that you should get with somebody right away, so that they can, if there's some things that you need to work on with your credit, you can get those underway and be ready when you're ready to find that house. Any other tips you have for me?
One of the things that consumers do now, obviously, if you're working with a mortgage lender, they're going to pull your credit, and then from there they're going to work with the consumer. But if you're not doing that, and let's just say you just want a good resource to go to access your credit, once a year you're allowed to go to annualcreditreport.com, and you can get a free copy of your credit report at each bureau. And the three bureaus is Equifax, TransUnion, and Experian. And you'll go there, get your free credit report, and then you'll be able to, if there's any problems, you can go and address those right then and there and kind of know where you stand.
Do you recommend that people pull all three at the same time?
The better way to do it is to stagger them. So let's say in January you do TransUnion, in April you'll do Equifax, and you get the point. You kind of go through and stagger them every 4 months or so. That way you're always getting a fresh look. The thing about the bureaus that's very important to know is that they are three separate entities. They don't share information. They're competitors. And, most creditors these days do report to all three, but not all of them. So you will have situations where maybe a particular creditor just reports to one and not the other. That's why it's very important that you go in and pull all three once a year. One thing we see a lot of people have problems with are joint accounts and co-signing accounts. Our mortgage clients come to us all the time and say, hey, our borrower's credit score has a late payment on it. It's not our borrower's. After doing some research, we find that maybe 3 years ago they co-signed for a car loan for somebody, or whatever, they're on someone else's account and there's a derogatory. So it's very important that if you co-sign or you're a joint owner on an account, that you need to make sure you're taking ownership of that account. You need to make sure you have a login and password to go in and check it once a month, make sure those payments are being made. If they're not, you need to go in and make them, and just stay on top of that, because otherwise you can have a really ugly surprise right when you need it the most, when you get ready to buy a house, and then this one late payment shows up or something. So that's one of the things we see a lot of that I really want to make sure people understand.
David, do you have any last words?
Make sure you pay on time, keep the balances low, and make sure you're aware of all the accounts that you're involved with, whether they're your own, whether they're joint, or whether you've co-signed for something, and just really try to be proactive. And also, don't be afraid to let the experts help you, especially as you're going through the home buying process. Your agent's got a great team of mortgage lenders. You need to all be a team together. Show them your cards. Say, here's where I'm at right now. Let them pull the credit, give you that blueprint, and get you where you need to be if you're not already there.
David Johnson with Credit Plus, doing some good work today on credit education with our clients. So thank you, and I look forward to working with you.
Thanks so much.